This is Mr. Zuni back at it with another video, and I just want to bring this video to you guys to help you guys out and show you what I did in the market. So as you can see, and probably from the title, lost around 2 grand over the last few days, especially with the market correction or market crash or whatever you guys want to call it. So I want to tell you guys what I learned, what I went through, and help you guys out in the future. So I think one of the biggest things I've learned, especially when you're dealing with like a Roth IRA or a retirement account, you can actually sell and trade and cash out of different stocks without actually getting taxed on the sell or getting out of a stock. For example, like Tesla, if I wanted to, I could have sold on Friday and wrote it out on Monday and Tuesday, threw it back in Wednesday or Tuesday in the afternoon. I mean, there's different options. I think that's one of the best options, especially when like we know that there's going to be a correction or a crash coming, because we've been having weeks on weeks on weeks of green and green and green. And I think last week we saw that the market kind of give us a hint a little bit. It was red, but not that bad. It was kind of green red. We were losing a few percentages last week, but I was kind of hovering. I think I was down around like 300 every single day last week, and then it progressively got worse towards the end of the week. So Friday was around like 6 or so. I was down on not in this portfolio, but I just want to show you my M1 Finance account. Just want to show you this is what I lost. Am I happy, or what am I gonna do? Obviously you don't want to take losses, but you got to change your mind frame. I think that's number 2 tip. First one is, if you're dealing with a Roth IRA or retirement, you can get out. If you think, but don't speculate. If you kind of see something coming, or if you just listen to yourself, I would say listen to your gut. Take a minute to kind of think about it and ground yourself, and to do what you want to do. Don't listen to a lot of people. These are just my tips and things I've done that will help me out in the future, and I hope you guys learn from them. So number 2 would be that changing your mind frame on red days. I think it's very important to buy on red days. I like to buy on red days. I really only buy on red days. So this was a buying day for me, or a week, I should say, Monday and Tuesday. So I like to put a little bit in, put a little bit in, put a little bit in over the dips, right? Because you never really know if it's going to go lower or higher. But if there is some red, you want to put a little bit in. Tomorrow, if it's red again, put a little bit in. I mean, that's what tips I'm going to use. And moving forward, learning from this. This is my first big market crash. I mean, I've had the market crash of last year. And I guess that was in my retirement account too. So this is technically my second, but this is my first actual managed crash or correction, or whatever you guys want to call it. So number 2 is, I would say, to change your mind frame, and if you can, leads into number 3, have extra cash on the side, especially if you are, I guess this is tip 3 and 4, have cash on the side. And number 4 would be to take your profits. It's okay to take profits, especially, for example, like Dogecoin. At one point in time, I was invested in there for like $200 early in January, and you guys saw it pretty much 10x at the end of January, and while it's going into February, early February. So I took my profits, and just reinvested it back into the market, or held it. So you can either do either or. For me, next time I'm probably gonna hold it a little bit longer. So when I earn profits and I'm kind of thinking the market might crash, or there's always a speculation, but this one was a little more heavy, just because we've been having nothing but green day. So obviously you're not gonna be green day all the time. So a market crash or dip is coming. It's inevitable. The stock market goes up and down. So just be aware of that. Save some cash, cash out if you need to. And I think this is the biggest tip I've learned that you can do, especially, it's not the best, but it's amazing if you do it right. So for example, Tesla, you can see that over the last week, I lost 12% of my Tesla, about $1,000 just in Tesla alone. As you can see, I reinvested back into things. So you can see I reinvested back in on the dips on Monday, but again, it dipped again today, so I'm going to reinvest a little bit more. Or I'll probably actually no, I'm gonna keep this the same. I'm gonna ride this out. I got my lower prices in, so I'm just gonna keep it there and ride the wave back up. Not really worry about anything else. I think, for example, the biggest tip on this one would be six, I guess, or five or six. I can't remember. I've been talking too much. So this one is something I've learned this year, especially when you're managing your account. So I had some Amazon and Apple stock. I had around the same price, or just under the Tesla. Tesla was my number one. I think Amazon, Apple was my second, third. So they didn't really fall much at all. I kind of see it. If you see in the chart, let me actually go to the chart. I was actually noticing this specifically for Amazon. For example, let's go to the 5 day. So this was actually, let's go to the day. Oh, it doesn't show me. Oh, I need morning. Okay, I think this is the morning because I don't know why it says February 7th. Way over there. I might have to go to Robinhood. Okay, so basically, I won't go to Robinhood. Let's actually, you know what I haven't used, I've been wanting to use more of is the actual Apple. Apple has their own platform. I always forget that. So I believe it has days too. Let me see. Do the day. Yeah. So what I did was so today's the 23rd where the big dip was. This is where it's kind of been around 333, went down to 3,200, so 3,200 here. So what I did was I cashed out, or I sold my Apple Amazon stock at this little dip, or the little peak up here, and I noticed that a lot it dipped too. I wonder if people are using this strategy. So this is number five or six. So if you have a couple high conviction stocks or stocks like Tesla you want to put more money in, and you have a stock like Amazon that didn't really dip or didn't really go down that much, maybe $100 or a percent, or I think it went down a half a percent or 2% today. Or you can see after hours it was actually up 0.43, and then it was down again 1.27. So what I did was I took my money from Amazon and Apple, cashed out, threw it back into Tesla because Tesla was at closed right now at 620 or 698, but it was exactly right here. It dipped down in the morning time. I think at 6:50 a.m. around here, it was like 6:20 or 6:30. So it's always important, like I said, to have money saved for these crazy dips. And that's what I did, and I think that's important to think about, especially when you have a balanced portfolio and you want to make sure that you don't get hit too hard, especially when you are in a market crash or correction. You kind of can throw things in. I believe when the actual crash happened in March, there was not much of a dip. Sorry, that was Amazon. Sorry. For Amazon, I don't think there was a dip in March. That I have to go a little 2 years. Okay, I believe this is where it was here. So it dipped down to like 1,800 in March. As you can see, that's around the time where the COVID or the correction happened, pullback, crash, whatever you want to call it. So it really didn't dip that much, and it actually shot up to 3,500 was its peak, and it hasn't recovered since then. So I mean, like for example, Amazon and even Apple too. Apple ran up after the crash as well, so you can see the little crash here. It wasn't $60; it was because of the split. But as you can see, it didn't really dip that much, $20 give or take. And then what did it do? Same thing as Apple, or same thing as Amazon. It shot up at peak here, and I believe this is where the stock split happened around this time. So that's, for example, is a good way to strategy, especially is great. That's what I did when my Apple, or sorry, I keep saying Apple. My Amazon stock shot up 3,500. I cashed one out, threw it in Tesla, and Tesla at that time, I think it was around $400. So don't mind that crash, or the stock split too. They split as well. So I mean, it says 80 some cents here, but it was around 400, and then it quickly, I think it went to a grand around here, and then it went to 2,500 here, and then the stock split happened around. Oh wait, no, sorry. I think the stock split happened around this time here. But anyways, my point is if you have a couple stocks like at Tesla and something else, I don't know whatever you guys want to invest in, but I'm specifically talking about Tesla, Amazon, Apple. You can use that strategy to cash out of any of those high or low volatile stocks like Amazon or Apple, and you can throw it back into Tesla, which you can get a great price, obviously, at $400 before the stock split. It's an amazing price because, as you can tell, I believe Amazon or Tesla ran up just under Bitcoin for a year over around, I think it was around a grand or 1,000% it went up. So those are some strategies that I've used that I hope helps you guys out. And remember, like, I'm not a financial advisor or anything. I'm just a guy on the internet just trying to help you guys out. But what I've learned about the market crash, hope you guys can take away from this and use it in the future. For sure, I'm going to be talking more about this, but I just want to give you some tips because I've seen a lot of videos where they talk about, hey, crash, crash, crash. And I want to provide you some value of what I did or what I think I should have done better in the market. So that's what I'm going to bring to you guys. So hope you guys like it. This is Mr. Zuni. See you guys in the next video. Peace.